Hello YouTubers, welcome back to the Independent Investor. I mentioned last week about I was getting kind of conservative, saw some headwinds in the market, and of course with the coronavirus, I'm not sure how all that was going to play out. Of course the market has basically treated that as just another buy the dip, and NASDAQ I think is onto an all new time high. I'm not as optimistic as that. I think there's still going to be some long-term repercussions to the economy, just because China plays such a large role in the supply side of so many companies. I was reading an article saying that a lot of the car assembly plants will have to shut down if they can't get parts in the next week or two, which would affect, be quite a negative on the global economy. And it's this week that the Chinese holiday was extended for a week. It's Monday that the workers are meant to be going back to the factories, but we don't know how many people are going to show up or what capacity. We still don't know if the disease itself has peaked. There were some signs of that. Fortunately, it hasn't really spread too much around the world. But even with what's happened to date, I think we're going to see economic data and earnings be affected, and I still think it could possibly get worse. So I'm basically probably going to stay around that 30% cash position if things do get much worse, and if the market does start to correct, I'll probably move to 80, 90, maybe 100% cash fairly quickly. I wouldn't normally do that. This is one of the longest running bull markets that we've had. It's, I think, the second longest running. I think the one in the 90s was longer, and it's also gone up, I think the second amount, like 500% or something from the bottom in 2009. So I'm way more on the spectrum now, onto the conservative side. And I think that's something you have to do when you're investing, kind of know where you are on that whole risk tolerance. But that being said, I'll start off with an unfortunate one. I ended up selling Carnival Corporation, which I talked about in a previous video, so I won't talk about it too much here, other than the reason I sold it was because of the coronavirus and all the news around the world of several ships being quarantined and people actually stuck in their cabins, I think in one case for up to 2 weeks before they could get off. Just not good publicity for the industry, and I think it's going to affect their earnings because the ships out of Asia got cancelled. And also it's going to be the back of people's heads, I think. Do I really want to get on a ship with 5,000 other people when this just happened? And this has happened before. They had the norovirus back in 2017 that kind of hit the industry. So it could linger this and could affect earnings, out a year or two. So I didn't really want to sell because it's almost like it's priced into the stock. The stock is selling lowest it's been in quite a few years, but it could still go lower, and I don't see it turning around and going up anytime soon. So I thought, well, I'll move it to cash. I don't have to worry about it. I shouldn't say that. I kept 100 shares just to kind of watch it a little bit. On the buy side, I did find I added to a REIT I already had, and that's Northwest Healthcare Properties. The symbol is NWH.UN, trades on the Toronto. I like this. I've got almost 10 REITs now. Unfortunately, between REITs and gas pipelines, that's kind of where the dividends are right now. It's almost another reason I'd like to see the market maybe correct 20-30% just to and not have a really bad recession, because it would reset a lot of the yields. From theory, if a stock is yielding 5%, if that stock drops 50%, now your yield is 10%. Of course, if you had that much of a correction, there's probably a really bad recession and they could cut their dividend. But anyways, that being said, a mild sell-off would bring the yields up on a lot of my investments and then make them more attractive to purchase, especially if the economy was not that weak or not really affected by the economy. Like some REITs, apartment REITs, they most likely wouldn't be affected by a slight slowdown in the economy, especially Vancouver and Toronto, where it's almost impossible to find an apartment. So you'd have to look at each one in an individual case, of course. But getting back to Northwest Healthcare Properties, it's got a 97% occupancy rate, so pretty much everything is leased out. And what I liked was the diversification it gave me, in that it's a pure play on healthcare. It's the healthcare real estate market is $3 trillion. And they focus on the cure side of the market. So that means hospitals, post-acute rehab, and outpatient, and they have some life sciences buildings. And we know with demographics that healthcare costs will probably continue to increase over the next decade or so as the boomers age. The effective funds from operation were 92 cents, and its dividend is 0.80, so it's nicely covered from effective funds from operation. It's got a net asset value of $11.84. It's trading around $12, so it's trading around its book value. Its payout ratio is 87%, which is pretty healthy. No worry there. And its dividend yield, which is very attractive. Like I say, it's getting harder and harder to find good yields, is 6.51%. Of course, they get that by having a leverage of 50%, which a lot of REITs do. But they keep their leverage around that 50%. It hasn't changed too much over time. And also, I liked that it gave me diversification geographically too, because they operate in Canada, Europe, Brazil, Germany, and England with about $5 billion in assets. So this isn't a small fund. And they have about $500 million in what they call brownfield developments or new developments. So, so I like that one. Like I said, I've already owned it, but I just added to it because I sold, like I mentioned last week, I sold a lot of my utilities that have gone up like 50%. And when you get a dividend stock going up that much, to me it's kind of silly not to take the capital gain and wait for a price adjustment and then repurchase. So we get the chart. Okay. So here's the weekly chart, going all the way back to 2010. You can see it got all the way up to $14 in 2014, came all the way down to $8, so it can be volatile. But since that bottoming out, it's been on pretty much upward trend right to where we are today. Of course, I'm buying kind of at the high side here, but then again, it was the same price back in 2012. So, and looking at all the metrics, it doesn't seem to be too overvalued. So I got it a little bit lucky on this one too, and I bought it. We get the daily chart. I bought it here around 12. My average price down here is because I bought previously around 11.40, 11.50. But the last few days, it's had two big, these are very bullish candlesticks, two back to back. I haven't searched to see what's caused that, if earnings came out, but I moved from 12.40 almost up to 13. I certainly won't be buying any more here. But it's always nice when you purchase and it moves, the stock moves up shortly after you purchase. So that's that one. The other company I bought is Dow Chemical. Probably everybody's heard of Dow Chemical, and pretty boring, blue chip. But what I found kind of exciting about it, interesting, was its dividend yield was 5.69%, which is probably at least twice the average dividend of a US paying company. And I'll also explain how I've kind of increased that dividend by doing a covered call. Also, its dividend is meant to grow from 280 where it is now. Value line has it growing to 360 by 2022, 2024. Its dividend should be safe. They had a free cash flow of $7.60. Capital spending was about $355. So they're generating net cash. Price of sales was 0.84, below 1, so that's quite low, but what you would expect for a company like this. Price to book, a little bit elevated, 2.66. Rather see it around 1 or 1.5. But like I say, everything in the market's pretty on the expensive side. But so this I didn't know this, but Dow had merged with DuPont, and then last year they spun off the DuPont, and the company's separated. So now there isn't much trading history on it because now it just trades as Dow, and the symbol is Dow, DOW, on the New York. I'll go through the chart.